What up, Hyperchange? Welcome to another episode. Tesla's just reported its Q4 2018 production and deliveries numbers, so we're going to go through those in this episode. The stock is down about 7%. As I'm recording this, I was pretty surprised to see the market not like these numbers. I thought they were awesome, so let's get right into it and break these down. So during the quarter, Tesla produced 86,555 cars, up 8% from the all-time high in Q3, 61,394 Model 3 vehicles, up 15% sequentially, and about 25,161 Model S and X vehicles, consistent with the long-term run rate or goal of about 100,000 per year. In terms of deliveries, Tesla delivered 90,700 cars in the quarter, 8% more than the all-time high set last quarter. They delivered 63,000 Model 3s, 13% growth, 13,500 Model S, and 14,000 Model X. For the full year in 2018, Tesla delivered 245,000 vehicles, 145 or almost 146,000 of those were Model 3, and then about 100,000 were Model S and X. And I love this fun fact to put things in perspective. They delivered almost as many vehicles in 2018 as they did in all prior years combined. So unbelievable growth for Tesla. If we take a look at the charts, this is Tesla's vehicle deliveries by quarter since they started selling the Model S. As you can see, two breakout monster quarters in Q3 and Q4 as they've expanded Model 3 production, 90,700 units delivered. If we take a look at that in comparison to Q4 2017, you'll notice they delivered about 30,000 cars in the same period last year. So they grew about 204% year over year. In deliveries, they tripled, more than tripled. So Tesla, a complex manufacturing enterprise, is tripling its year over year growth. This is incredible numbers for Tesla. This is why the company trades at such a premium, because it's growing so quickly. If we take a look, if we break out just Model 3 deliveries, there were 63,150. Not huge growth from Q3, but they did set another record there. That was promising. It was just over my estimate of 62,000. So proud of myself for getting so close there. If we take a look at the annual vehicle deliveries, here are the final numbers. Tesla delivered 245,000 cars. This is up 138% from the 103,000 in 2017. So tremendous growth for Tesla. And just for fun, here's what I'm projecting for 2019 is about deliveries of 300,000 Model 3, 65,000 Model S, 55,000 Model X, which gets me to about 420,000 cars total in 2019. And I've actually dropped my estimate for Model 3 deliveries from 400,000 next year to 300,000 because I think demand is going to be a little bit softer, and it depends when they come out with that cheaper car. Now, let's head back to the press release to get some more insight into the quarter. So this was a very interesting tidbit. More than 3/4 of Model 3 orders in Q4 came from new customers, not reservation holders. So Tesla still has a backlog of hundreds of thousands of people waiting for the Model 3. But, out of the 63,000 cars they delivered, 75% of those didn't come from the backlog. So only about 15,000 Model 3 orders this quarter were coming from out of that multi-$100,000 backlog or multi-100,000 car backlog. And the reason for that is a couple things are going on. First of all, Tesla's only really delivering Model 3 in the US right now, or they were in Q4. That backlog is global. So those are people waiting in China, in Europe, all across the world. The other thing that's going on there is Tesla still hasn't released the $35,000 version of the Model 3. And so because of that, a huge portion of, let's say, US reservation holders who haven't ordered yet are holding out for that cheaper price version of the Model 3. I'm taking this as a positive because, Tesla, a lot of people are just assuming that the reason why they've been able to sell so many Model 3s because of all this pent-up demand from the backlog. But now we're seeing that, 75% of the orders in this quarter were new orders that were happening. But it is important to note that the tax credit did expire at the end of December in the US. And so before you were getting a $7,500 tax credit if you bought an EV or a Tesla. Now that's been slashed to $3,750. So they did squeeze up demand in Q4 because of that. And then even more interestingly, because of that tax credit phase out, that Tesla announced along with this delivery news, says starting today, we are reducing the price of the Model S, X, and Model 3 vehicles in the US by $2,000. So they're offsetting some of that decrease in tax credit phase out by just simply lowering the prices on all their US cars. Now, this raises a lot of questions like, are we running out of demand? Is that why they're lowering prices? Is this going to hurt margins? What's going on? I mean, Point number one is I think Tesla is continually making progress on bringing the prices of its cars down so they're more affordable to more people so it can really transition the world to electric vehicles, which is the company's mission. So that's really, I think, the main thing that's going on here is Tesla's cheapest car without any incentives in the US just went from 46 grand to 44 grand. That's a good thing. We're getting closer and closer to that $35,000 goal. But the other thing is part of me thinks there is a little bit of softening demand. I mean, Tesla made a huge push to get everyone possible to order their cars in the US before the end of December. So it makes sense that demand would sort of, fall pretty dramatically after that tax credit phase out. But the other tidbit that they put in the press release is that there remains significant opportunities to continue to grow Model 3 sales by expanding to international markets, introducing lower price variants, and offering leasing. International deliveries in Europe and China will start in February. Expansion of Model 3 sales to other markets, including a right-hand drive variant, will occur later in 2019. So kind of from Tesla's perspective, what it looks like what's happening is they've exhausted a lot of that initial Model 3 demand, and demand is going to be pretty low for the next 3 months for the Model 3 in the US. They're going to international markets to start to fill those orders in Europe and China, and that's where they're going to be sending a ton of their cars starting in this quarter. And so that is sort of the transition of Tesla, is they're migrating from the Model 3 just being a US thing to being a global thing here in early 2019. So that wraps up my analysis of Tesla's Q4 production and deliveries. It was a breakout quarter for the company. 90,000 cars delivered, a new all-time record. They're lowering the prices of their cars, so it's even cheaper for you to get one now. I thought this was very promising news, a continued step in the right direction for Tesla. Now we're going to be waiting for later in the month of January or early February to see the company's Q4 financial results to see what this translated to in a fiscal perspective. My guess is the company is going to be able to be profitable once again in Q4 as they've guided. But they did sell more cars than in Q3, up about 8%, but they also sold a lower price mix of the Model 3. So I think margins might come down a little. So who knows what profitability will be. I think they're going to be able to be in the green, but are they going to make as much money as last quarter? Maybe not. Please let me know what you think of these numbers in the comments below. Were you proud? Was it above your estimates? What do you think? Is Tesla on the right track? Is demand running out for the Model 3? Also, a huge shout out to our Patreon supporters and producers helping out the channel. Definitely check out our page there. Anyway, this is Hyperchange. I'll see you guys next time. Peace.